For now, the street believes that the company's corrective actions and the fact that there has been a successful integration of Spot On, then it's spot on.
Yeah, okay. You punned on it before I could. All right. Well, let's ask Prakash what his thoughts are. Prakash, good afternoon and happy Friday to you. You'll find us sounding a little more cheerful than usual for obvious reasons. Let's start with some of these new age companies. Your thoughts on what Mangalam said, Delhivery, even the others, Paytm, Zomato. A lot of those stocks are actually doing well today.
Good afternoon, Surbi. Yeah, and happy Friday to you as well. So, yeah, I think we've spoken about delivery some time back. Nigel and I had a chat on this when it was under severe pressure. And that was all thanks to those overloaded exits that were the PE exits that Mangalam alluded to. Those were always weighing heavily on the stock from a technical overhang perspective. But from the fundamental business side, Spot On is, of course, a great acquisition. Makes a lot of meaningful, sense in terms of synergies, and they'll be able to, make it accretive very quickly. But what's interesting is that space has had a decimation of the weaker players, and that gives the likes of Delhivery a lot of pricing power when things start looking up. It's going to be extremely difficult for people to make a comeback. The ones who have not been able to survive, who have scaled down, were critically, impaired. And that's where the space actually loses a lot of the weaklings and the stronger ones survive. Deliveries managed to do that. At some point, the unit economics will start reflecting very favorably. And I've been talking about this at the current levels, or probably even at closer to 380 when we spoke. It's something which has offered a decent risk reward if you are a long-term player. But remember one thing, the new age businesses are very difficult to evaluate on the conventional revenue stream basis. It's more of the opportunity size and how soon you could kind of start leveraging on that. And that goes for Zomato and the Paytms of the world. But Zomato has probably got its pricing right, has started seeing acceptance of, passing on those costs to the consumer, and rather than, haggle with the restaurant players. So that shift has been very gradual, very quiet, very subtle. But it will start reflecting in unit economics as well. So that's where probably people are counting on. But all of it's going to be in good time. There's nothing in a tearing hurt. Yeah.
Right. Prakash, the only non-performing new age stock right now is Nykaa, which is currently hit a fresh low. It's down over 60% from its post-listing highs as well. So we'll watch out for how that pans out. Of course, a bunch of other problems happening with Nykaa as well. We'll come back to you in just a bit, but important flashes at the bottom of the screen.
Yes, absolutely. And this is, of course, exclusive information that our colleagues are picking up. And this seems very, very interesting. We know that there has been a lot of back and forth and a lot of tossing of ideas around what to do with TERs, total expense ratio of funds. And it seems now, what we are picking up from sources, is that SEBI is looking at an entirely new category of performance-based charges. Right now, whatever we pay as the expense ratio on a fund, it has no bearing on the fund manager's performance. But it seems that this is a new concept that SEBI is toying with. Right now in discussion stages, we will actually get on this story in just a bit with our colleagues. Could be a very, very interesting one and an absolute, first of its kind idea in the Indian mutual fund landscape. But while we wait to get more inputs on mutual funds, let's look at life insurers, because a lot of the life insurer stocks are actually pressure, whether you pick up an SBI Life, HDFC Life, ICICI Pru. So what's troubling them? Of course, we know that the last quarter was good because you had that big push on the 5 lakh plus premium policies. But what lies ahead? Let's ask Surbi Sutaria, who has the details. Surbi?
As we've been pointing out, that the life insurance monthly data for the month of March is extremely strong. But the stock prices are giving us a different picture. All life insurance companies are trending downwards in today's trading session. And a couple of reasons for that could be, one, this growth is being driven by the increase in the average ticket size of policies and not by the number of policies being sold. And two, this accelerated growth could impact the numbers for FY24 now, as the growth will be on a higher base. Now, all brokerages also have a similar view, but they still are positive on this life insurance space. HSBC says that they have cut down their FY24 APE estimates by 600 basis points. Kotak says Q4 FY23 was higher than their estimates, translating into a higher base, but they will wait for all companies to report their numbers before they revise their FY24 estimates. MK expects a flattish kind of APE growth for FY24, And lastly, Investec says that the budget proposals will impact the value proposition in the high-ticket segment, but according to their estimates, it is only 10 to 12% of the VNB for all life insurance companies. They're all positive for this space, but APE growth for FY24 still remains a concern.
All right, APE growth for FY24 still remains a concern, and that's why perhaps all the insurance stocks are under pressure. Is that perhaps the reason why even, luxury realty stocks are under pressure as well, despite reporting a good number for the fourth quarter? Oberoi Realty is down about 4% as well. Prakash, your thoughts on both the life insurance space and the real estate space, mainly because a large part of demand took place in the previous quarter because the tax breaks are going to go away.
Yeah. So I think it's a bit irrational to believe that just because there's a higher base, thanks to the lumpiness in the March, month of March, when that advantage was getting over, that you would have on a year-on-year basis slow growth. I think it's a fallacy. The whole idea is that life insurance is a very secular uptrend. I mean, look at numbers from HDFC Life, Mangalam. It tells you exactly that it's not just a March phenomena or a tax break, or a regulatory cutoff phenomena. It's more to do with acceptance. And the more technology comes into play, my sense is, VNB is going to be, the VNB parameters are going to look very different in the next couple of years onwards. So wait for that. There is a level of digitization that's started a bit late in life insurance, given its complexities, and especially the documentation involved, as compared to, let's say, plain investments. And that's where, I think I see higher acceptance. So I'm quite positive on the space, but there's a basket approach that you always take. And some of the bond portfolio, the investments in bonds that LIC has got, they probably are not getting valued at the same level as what you would, have in terms of, what the MTM impact would probably be favorable for them as well. And that's going to start reflecting at some point in time in their portfolio. So all those things will kind of set things right. But yeah, very, very positive on the life insurance space. On reality, I just want to tell you, I think it's just a little bit of profit booking that's come in, given that monsoon will probably slow down things and, the general expectation seasonally. But it's in a great spot. The kind of demand, especially for premium segment. Overall reality, the numbers were fine. I think it's just profit booking because their projects are doing well. The offtake is positive. There's no contraction in demand in at least the luxury housing segment. So people who have very clear identified assets being built up there and an inventory build up there will benefit. Focus on pockets like the NCR or maybe Delhi. Those are areas where there is still a lot of pent-up demand and very less supply, unlike Bangalore and Hyderabad and things like that. So I think you can choose a lot saliently, but real estate is definitely something you should look at in your portfolio for sure.
Okay, all right, got that. Thanks for those inputs. Stay on, Prakash.